Welcome to the Wednesday edition of the Real Estate Show. Getting ahead of myself. We are here live Monday through Friday. That's 5 days a week. Sometimes I can't even remember which day of the week it is. It's been such a busy week and so much activity going on with the real estate market, the bond market, the Fed making their announcement. What else? The elections. It's just amazing what's going on here in this environment that they call the pandemic. And we got a great show for you today. So our midweek report is actually very an appropriate day for all of this activity going on here. And we strive here on the Real Estate Show, especially on our midweek report, which is every Wednesday. We try to go to the market and the news that's going on in the marketplace. First of all, bring it back and relate it to what's going on in the real estate market, and then more importantly is what you do with that information, right? This is not for your entertainment only, but for you to be entertained, and let's call it edutained. That you're educated, entertained, and are given the tools, and I think we do that during the week. We start out our week every Monday with our Mondays on a Mission, defining a key concept that we want to work on and really unpack and dive deep into during the week. Tuesdays, we hit the ground with our tools, tips, and techniques, and we talk about practical things that we're doing in regards to this concept, this theory, this thought, this subject that we're talking about. Wednesday, like I said, now we go out into the marketplace and we see what's going on and how does that affect what we're talking about. And it's often no coincidence that there's news in the marketplace about the very topic that we're talking about. In fact, hasn't been a Wednesday where I says, "Help, folks, all the news has nothing to do with what we're talking about here on the Real Estate Show." That has not been the case yet. And I don't foresee it being the case anytime soon. But with all that's going on there in the marketplace, that the one thing that I thought, aside from the fact that the Fed said that they're going to start easing some of the stimulus that they're doing, which is good, right? We want the economy to be operating on its own 2 feet as opposed to all the crutches that have been provided there. So that's number one. That's actually a good thing. In the macro picture, it's going to be a bad thing because all of my colleagues in the mortgage business now are busy calling up their clients saying, "Hey, guess what? Rates are probably going to adjust up now as we start getting into this this sort of new phase of not quite post-pandemic, but certainly seeing the light at the end of the tunnel and moving forward in this regard." So that's a big deal. Obviously, everyone's paying attention to what's going on in politics and in Washington, and this last week, in Europe with the G20, and everyone's sort of holding their breath to see, what are we going to do? How does the world see what we're doing? And then, of course, we can all make our judgments whether it's the right thing, if we're going in the right direction with a positive spin or not, right? But one of the things that I thought was really key, and I think that this probably won't land on every ear the same way. In fact, most people will kind of shrug and say, "Well, what's the big deal?" But a big deal just happened a couple of weeks ago, and now we're starting to see the repercussions. And what's kind of interesting, and I don't have the answer to this right now. What I want to do is I want to give you some of the information that I have, and I'll give you some of the perspective that I have, and so that you can make your own decision, and perhaps you want to join us in what we're about to embark on, because what has been an interesting evolution. Zillow is kind of like the Amazon of real estate, right? It's a company that for years and years was bleeding red on its balance sheets and on its profit and loss, especially. And even in the last, I would say, 2 years, they bled even more because they were betting, right? And maybe it's better if I back up a little bit, talking about what Zillow, was, what Zillow became. And I don't even know very many people that actually sounded the alarm when I did. And what I saw was the following. And I saw the similarity between what Amazon and Zillow were doing, right? What they basically did is that they went into a low complexity model, right? What did Amazon do? They were a bookstore, right? People thought they were competing with Barnes and Noble, so no one paid a heck of a lot of attention. And to their shame, nor did Barnes and Noble. And of course, now Amazon has basically crushed them in terms of volume and numbers. But what they were doing is that if they could deliver something as simple as a book, and do it on a national, and obviously their view was international, global view, then what's to say that a book isn't a widget? A widget isn't a pair of shoes, a computer, roller skates, or anything else. So, and they obviously perfected the model. They perfected getting the consumer's confidence to do that, and they had all the data. Who were the clients? They now had the names, the email addresses of all these people. Because if I can sell you a book, what else can I sell you? And I know what kind of books you buy, right? If you think about it, they were absolutely brilliant in their execution, and they blew it up, and I say that in a positive way. Zillow, on the other hand, approached sort of the same thing. They said, what we're going to do is we're going to deliver information about real estate, because that's what everybody needs. There was no singular place. In fact, here's an old discussion, and I think you're going to see this discussion heat up again. But what Zillow did was what the Real Estate Association, the National Real Estate Association, the National Association of Realtors, with all of the little MLSs all around the country. And what they did since the beginning of their existence, remember, the MLS used to be, looked like a phone book, this book full of little tiny black and white photos of a property and all the information. And you had to go contact a real estate agent, because only real estate agents had the book. And I forget what it was, whether it was a week or a month or 2 weeks, but they used to deliver, because this is going way back. They would deliver the stack of MLS books to the subscribers, and you had to be a member of the National Association of Realtors, the Florida Association of Realtors, and then your local, wherever you were, Boca Raton, West Palm Beach, Miami, Fort Lauderdale, Board of Realtors, which made you a member of all three. And then you paid extra. I mean, they literally hijacked the real estate agents' money, because they had no other choice in order to get the information. And the consumer was dependent on the real estate agent, because at that time when they were doing the books, there was no internet, and there was, there was no internet. And as time went on, the books became digitalized and put on the internet, but they still were keeping that information closed, until along comes this company with a weird name, Zillow, that starts publishing information about every property that there is out there. And they were coming up with, from the technology side, the algorithms to figure out what the value was. And they became the company, because now they're walking squarely in the domain of real estate agents, and openly and freely providing the information that the public used to depend on the realtors for. So, of course, the realtor's response at that point in time was, but look, it's not exact, it's not right, it's not complete, and it's always wrong, right? And the data, the market value of a property, what is it really? It's what a ready, willing, and able buyer and a ready, willing, and able seller are willing to exchange. And that changes, right? It changes with the marketplace, it changes with the area, and it even changes with the circumstances. So that number is always a fuzzy number and always probably will be. It's not like the New York Stock Exchange that the share of Intel trades at X dollars and you buy it or you sell it. So real estate had this new information, free information provider. Well, can't do anything. Nothing is for free. How does Zillow stay in business and provide this service? So they started doing advertising. And so you had banner ads of all sorts. Then they started charging real estate agents to be able to be positioned. So whenever somebody searched in a certain market, if the real estate agent was willing to pay a subscription to Zillow, Zillow would put them on the page when in the zip code that they wanted to be. And if you paid a little more, your picture would never change. If you paid a little less, they would rotated the people who weren't paying a lot. And that worked. And they started growing and growing and growing. And all of a sudden, guess who had the most information? They obviously bought the information that came from the MLS. So they had everything the MLS had, maybe not in as much detail, because again, the modus operandi of the MLS has always been to hold back as much information, make it exclusive, so that you still had to go find a real estate agent. But more and more people, if they had all the information of the properties and there were pictures and there were maps and there was data about that, brilliantly, what they did is they said, hey, claim your property. If our information isn't right, go ahead, make it right. We'll do it, let it for free. And they got basically the world to self-populate the Zillow information, thereby making it even more valuable. And that's what they had. They had data, and that's what they had all the way along. And then somewhere along the line, they got the brilliant idea. And this is when I started saying, hey, guys, there's something weird going on here. And I'm going to tell you why this is ultimately weird in the conflict of interest sense of the word. Because what they used to do is be an open sort of a quasi-public venue of information, a place where a marketplace where realtors and mortgage companies and everybody could come there and advertise. And the more traffic and more people that were coming on the Zillow, the merrier, because the advertisers liked that. And of course, Zillow and their profitability liked that as well. But I'm going to take a quick break because I want to break at this particular point, because there was a sudden shift, a subtle, not most people didn't see it, but there was a sudden shift where Zillow took a different path, and all of a sudden they became the realtor's cannibal. And most realtors don't even realize that Zillow was eating their lunch for the longest time. But we're going to take a quick break. You're hearing the Real Estate Show today on our midweek report. I want to come back because Zillow made another sudden change, and this is a big one, and I'm going to tell you why it matters to me and you that are buying real estate right now. Anyway, you're listening to the Real Estate Show. My name is Eric Willner, and I will be right back, so don't touch that dial. Hey, Diane, Darius, Wesley, where are you guys from? Type in there in the comments, if you will, where you're watching from, if you're not driving. Hope you guys like this information. And in fact, when you follow the rest of where the bouncing ball goes, you're going to find out, especially real estate agents. Real estate agents should continue to be worried, because Zillow is about to change the National Association of Realtors model. But the latest development is going to be huge good news for us mom and pop investors. And it'll be very interesting to see what happens over the next couple of months. Hey, Susanna, how are you? Thank you for typing that in there. I haven't even given out the text word yet for today, but there it is. It's in the comments on our Facebook Live. The text the word discovery to 561 861-2366. I'm gonna add a word tomorrow because of today's article. We're coming back. $5.75, $77.79. And welcome back. For those of you just joining us here on the Real Estate Show, you're listening to America's longest running daily radio show about real estate, and certainly Florida's #1 show about real estate, heard live 5 days a week, wherever you're listening to us, because we come on the air 5 different ways. We're on the air on AM 1470. We're on the FM dial at a number of places, 95.3, 96.9. We're on the app, so you can take us with you on your portable device. Just go download one of the free apps, search for WWNN 1470 Money Talk Radio. WWNN should get you there, and you'll see the black and red logo for the Real Estate Show. We're also on the web, on our website at automaticlandlord.com or therealestateshow.net. All of those will take you back into the place where you can also click at the top of the page where it says The Real Estate Show, and you can choose if you're there live at 5 or anytime that you want to listen to The Real Estate Show 24/7, 365 days a week. You can listen to it on demand. In fact, you can even download a podcast and take it offline with you. But if you're online, you'll hear it crystal clear. As I was just mentioning, we're on Facebook Live every day as well, where you can watch and participate there in the comments, as I was just having a chit chat with some of our viewers on Facebook Live. And I hope one day you'll drop by, join us in, let us know where you're watching from. Because we're on the internet now, we no longer are just a Florida show. We're heard and followed by folks literally all around the world. And speaking about following, I was talking about this whole evolution of what Zillow has been. And then as I was talking about just before the break, is another big change, and it's a very significant change. I don't know, with all of the hoopla that's going on in Washington and the elections and everything, that this will even be noticed other than by people like myself who are watching this industry very closely, and perhaps some of you who are more interested in real estate, as a good purchase for your home, but even more so for investors. And this is where this is going to get very interesting. If you were a real estate agent and you've been following what I've been talking about, you must have been somewhat uncomfortable when you started seeing that Zillow, instead of being a marketplace for anybody who wanted to advertise, decided to first sneak into the mortgage industry. And they started offering Zillow mortgages, and they basically crowded out all of the other mortgage companies and started offering mortgages right to the same crowd and competing with their advertisers there. So that's not a good sign. The next thing you know, they're going to be doing that with the realtors. And lo and behold, now Zillow is licensed in all 50 states. Zillow now has a real estate brokerage arm, and Zillow even got into the real estate investment business as a wholesaler, a flipper, buying houses, rehabbing them, and flipping the properties for an even bigger profit. Now, why is that a problem? Well, most people have been conditioned now to go to Zillow to figure out, hey, what's my house worth? I'll go to Zillow. Well, Zillow now will tell you the price that they want to. And now you'll notice that Zillow has become fairly consistently low. Now, let that sink in for a second. And what that means is that when they come in and says, hey, listen, you don't need to go find a realtor anymore because you've got Zillow. If you want to sell your house, you don't have to list it. You don't have to have all the traffic going through your house. You don't have to do showings and pay a huge 6% commission. And mind you, when I say huge 6% commission, they automatically discount it. You don't pay it, but they already built it into their price. They also have a number of other little fees and everything. And if you had watched the numbers, and if you did the numbers side by side, or what the net sheet was, yes, the same way when a local real estate investor makes you a cash offer at a discount, it's the easiest way to sell a property. All cash, no inspections, no appraisals, no repairs. And Zillow became the monster investor in the marketplace. So now they gobbled and cannibalized the mortgage industry. They gobbled up and cannibalized the real estate agents, and half the agents are still paying Zillow to advertise on there, while Zillow is contacting those very same traffic directly. And so now what's very interesting, and if you recall, and you can go back and search in our past shows, I spent an entire week talking about the iBuyers. iBuyers, the letter I, buyers, stands for institutional buyers, of which Zillow is probably one of the biggest. And these folks here use this, use their massive bulk purchasing power to go in there and buy properties. Now, if they're telling you the information of what your property is worth and then making you an offer on based on their influenced number, shall I say, the idea was that watch, if you thought we could make money with advertising, we're going to make money in much bigger chunks when we buy, fix, and sell these houses. And when I was doing that week talking about the institutional buyers, I was telling you a lot of them, they're not discounting as much as they originally were, because they were buying market share. They were crowding out mom and pop investors like you and I, because they were offering more than what we knew made sense. But because they had the deeper pockets, they had the ability to raise money on Wall Street. They would come in and buy properties at higher valuations than what we could, which means, by the way, that when it comes time to do the fix up and expenses, and then, they're betting that they have lower marketing costs because they have the marketing power of the Zillow brand and all the traffic that they have, that they'll eventually be, by owning the market share, they'll make up the margin and they'll become profitable, because they weren't. Well, that bet apparently didn't pay off very well, and they have been losing money for years in the process of buying the market share. And so here's the article that it's dated November 3rd. Zillow's flipping halt marks a major collapse in their housing push. So bad news for Zillow, and maybe it's a little bit of karma. What comes around goes around. What they were doing with the real estate agents and the mortgage companies, and to the small investors. But what you're going to see, and it will leave a hole in the market, because this was a lot of dollars. We're talking about hundreds of millions of dollars that now will suddenly stop. And now let me read a little bit out of the article for you in the remaining time that we have. It was the startling culmination of a turbulent few weeks for America's most famous real estate company, Zillow Group. They pulled the plug on its tech-powered home flipping operation. The decision reached by the board of directors on Tuesday morning sent the company's shares plummeting. It raised the big question about what comes next for the Seattle-based Zillow, which had staked its future on the idea that its data scientists could power a business that buys and sells thousands of homes per month. And then there's an article a different article about how they were racking up the losses, probably one of the articles that I covered when we were talking about the iBuyers. Now, analysts, the article goes on to say, competitors and industry observers are left to puzzle over how exactly the company managed to misjudge the housing market so badly that it's writing down more than $500 million, $500 million on the real estate it purchased. So if you're an owner of Zillow stocks, I'm sorry for you. But if you are a real estate investors, you're going to want to come back to the next episode of the Real Estate Show, because we got some good news and good information for you. Anyway, the music's coming in. That means that my time is up. It's time for us to wrap it up here on the Wednesday midweek report edition. That was a good one. But I hope that you will join us again. each and every weekday, Monday through Friday at 5 p.m. on one of the 5 different ways. In fact, the way that you're listening to us right now will do just fine. Anyway, until then, this is your host, Eric Willner, signing off. Drive safe. Make it a great day. Bye-bye.